Hey traders, Mike Sir here. Welcome back to my How to Trade Like video series where I teach you how to trade like the top traders in the world. Now in this video, I'm going to teach you how to trade like CIS. Now you may be aware of CIS in my Top Trader video series where he became famous for making over $34 million by betting big on the collapse of the global financial markets in 2015. But what's impressive is he went on to build a $300 million trading fortune. So in this video, I'm going to break down two of CIS's favorite trading strategies and outline for you step by step on how he looks for trading opportunities. In addition, I'm going to share with you one powerful trader mindset that you need to master in order to be as successful as CIS. So let's get started. So first off, let me share with you and let you guys know that CIS is both a day trader and a swing trader, depending on the market conditions. Now, he is purely a price action trader, meaning he makes decisions whether to buy or sell purely based on the price movement. And he doesn't necessarily spend a lot of time analyzing, let's just say, a company's fundamentals or do fundamental analysis or analyze, economic data. He mainly relies on the price movements to make his decisions. Now, also like BNF, he is a trend trader. So he specifically looks for trends in the markets. Now, one of CIS's favorite trading strategy is what we call a moving average crossover, when a short-term moving average crosses a longer-term moving average. So let me show you guys an example on this chart. So first of all, let's go to the indicators here and pull up a moving average crossover. Okay, right here, MA moving average cross. And then specifically, he is utilizing two moving averages. The short-term moving average is 5. The longer-term moving average that he uses is 25. So for this example here, the orange line is the 5-day moving average. The green line is the 25-day moving average. So what he's looking for is whenever the short-term moving average, in this case is the 5-day moving average, crosses above or crosses below a longer-term moving average, then it will tell him what direction that the price is going to go in. All right, so let's just show an example here. Now you can see here, this is a cross here. So when the short-term moving average here, you can see it cross below the longer term moving average here, you can see that the price actually went lower. Now, if we look at here, when the short-term moving average, the 5-day moving average, crossing the 25-day moving average above it, then you can see the trend go up. Okay? So that's the way that he utilizes the moving average crossover to determine whether he should buy or whether he should sell or short the market. Now, specifically because the moving average crossover is a trending indicator, it works best in markets where it's going up or going down. But let me show you an example where the moving average crossover does not work well in a non-trending market. So you can see here the markets here, or the prices here, is going down, up, right? Sideways. And you can see here, this 5-day moving average, short-term moving average, crossed below the longer term, so you would short, right? But then the price would go back up, right? And then you would be making profit, but then you would be exiting, right? With a loss here, because it went above, and then went down, and then went above, right? So it works best in a trending market. Now here you can see that I am using a daily chart. So if you're a little bit of looking for longer term trends, you can use a daily chart. But if you are a day trader, you can use a 5-minute chart. Okay, so let's see how this moving average crossover would work in a shorter term market. Now, in a shorter term market, in terms of day trading, you might get a lot of false signals depending on the market, whether it's trending up or trending down. So let's take a look at here. So you can see that, well, this price went up here. So you can see here, this green, which is a short-term moving average, crossing above right here. Let's just say if we use this one, crossing above, and then it failed. And then you can see here, the short-term moving average, which is the orange line, crossing below a longer-term moving average, which is 25. You can see here, kind of just goes sideways, right? Because again, the markets are sideways. So if we were to find something where, okay, on this day it's trending, you can see that price is going up. The short-term moving average, orange line, crossing the longer term, you can see it, the trend, right? Trend up. And then you can see a short-term trend here when it crosses below here. The orange line crossing below the green line, and you can see it go lower. So it works, this moving average works both for day trading, for utilizing 5-minute charts, or if you are looking for, or a trend trader for a longer period of time, maybe a swing trader holding for days or weeks, then you can use a daily chart. The next thing that I want to share with you is that CIS likes trading the Nikkei 225 index. And specifically, he likes to trade it with futures contracts. Again, if you don't know too much about futures contracts, check out my other videos where I discuss about trading futures contracts. So here's a chart of the Nikkei 225 index. Basically, is the barometer for the performance of the Japanese stock market. So one of the strategies that he utilizes to trade the Nikkei 225 is basically looking for a correlation between the Nikkei 225 index and the Euro versus Japanese yen Forex pair. So what I'm going to do is I'm going to add the currency pair here. So it's the Euro versus the Japanese yen currency pair. So I'm going to add this. Okay, so you can see the Euro versus the Japanese yen is the lines in orange. So what he's looking for is, or what he's realized is that there is a positive correlation between the Nikkei 225 index and the Euro versus Japanese yen currency pair. So he sees a positive correlation, so they specifically move in tandem. So they have a positive correlation. So when the Nikkei 225 index, you can see here in the candlesticks go up, the Euro versus Japanese yen goes up in value. Now, I'm not going to explain too much in detail exactly how the currency pair works, but what I would say is the Japanese yen, it typically serves as a safe haven currency. So in times of booming markets, usually the Japanese yen falls in value, and for example, the Euro versus the will go up as well, and the yen will go lower in value. So therefore, you can see the Nikkei 225 index go up. So that's why also the Euro versus Japanese yen goes up in value, because the Euro goes up and the yen goes down in value. Now, what he specifically utilizes, he doesn't necessarily play the positive correlation. What he does look for is when the correlation is out of sync. So I want to show you guys an example here. Now you can see here, there is basically a disconnect between the Nikkei 225 index and the Euro versus Japanese yen. And specifically here, he looks to the Euro versus Japanese yen here. You can see here the the currency pair actually rise here. That was a signal. So it rises, but yet the currency, the Nikkei 225 index actually starts falling. And you can see as it falls here, it actually starts rising here. So this signaled to CIS that the Nikkei 225 index is probably very weak, given the fact that there's actually a negative correlation. And you can see here, the euro versus Japanese yen was actually rising. Now then it turned up, so the market did rebound here, and then it started aligning. So what he's looking for specifically is when there is no correlation between the Nikkei 225 index and the euro versus Japanese yen. That gives him an indicator of whether the Nikkei is strong or the Nikkei is weak.
I want to end this video with a very simple but powerful mindset quote from CIS. Some people can do it, some can't. So what CS is really saying is that some traders like himself are very aggressive traders and can trade incredible amounts of money. Therefore, it's allowed him to make a $300 million trading fortune. Now, most people dream of making it big from trading, but they can't put on these big trades or have nerves of steel to handle the volatility of the markets. Thanks for watching. If you like this How to Trade Like Top Traders in the World video series, please smash that like button and hit subscribe if you haven't already. I would really appreciate your support. Now, next week, I will be teaching you how to trade like Paul Tudor Jones, one of my favorite hedge fund managers. I'll see you all in the next video.